Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, February 9th, 2024. During the past year, small cap stocks have gained no ground as measured by the Russell 2000 Index. And here I have a chart of the Russell 2000 Index open going back a year, and over here on the far left, you can see right here this little jagged peak up on March 3rd. That dotted line is almost exactly about where it was a few days ago. So maybe it's gained maybe like 1%, but basically it's gone nowhere. You can see it rose, dropped down, rose again, dropped down again. Now that's worth noting given the 21% rise in the S&P 500 index and 32% gain by the NASDAQ Composite Index over the exact same time. That discrepancy in performance has been accentuated since the start of this year, as shown in the circled area in the chart accompanying this article. Now, so again, if I do year to date here on this chart, I'm going to do actually past 6 months to make it, you can see the bottoming out at the end of October, the peak right here at the end of December. But since then, it's not been able to get above where it was back there during the last week of December. That probably means one of two things is about to happen. Either small cap stocks are grossly undervalued and could have a banner year in 2024, or a prolonged economic recession is on the way. For what it's worth, I believe the former is more likely than the latter. If Wall Street genuinely believed that the economy was about to contract, then it would be moving money into bonds instead of into large cap stocks. Even big businesses are adversely impacted by a recession. In that case, the Fed would most likely start cutting interest rates to stimulate the economy. That would drive down bond yields while increasing their prices at the same time. Instead, bond yields have risen since the start of the year, so I'm going to show you a chart now of the yield on the 10-year Treasury note. Again, this is going back 6 months. You see it peaking around the end of October, right almost at 5%, just a hair below 5%, dropping all the way down below, I think it got down below 3.8%, something like that, at the end of December. But since, again, the start of this year, other than this one little drop here a week or so ago, it's already back above 4% and almost at 4.2%. That's not a big increase, but is the direction that is important. Bond yields should be falling if Wall Street was buying bonds in anticipation of a recession. If I'm right about that, then small cap stocks should reverse direction once it becomes apparent that a recession is not in the cards. The simplest way to participate in such a rally is to own shares of a small cap fund, such as the 3 small cap funds we hold in the Personal Finance Fund portfolio. So if you go to the Personal Finance homepage under Portfolio, click on Fund, go over here to the far right, click on the category header, and then scroll down. At the bottom, you'll see these 3 U.S. small cap funds. Now, of these 3, 2 of them are index funds that are designed to mimic the movement of the entire sector. However, the T. Rowe Price small cap value, and that's the one at the very bottom here, is an actively managed fund that, according to the fund sponsor, will seek the stocks of companies whose current stock prices do not appear to adequately reflect their underlying value as measured by assets, earnings, cash flow, or business franchises. We don't normally recommend actively managed funds over exchange-traded funds, but in this case, I believe an actively managed fund might make more sense. If Wall Street decides to jump on board the small cap bandwagon, the algorithms it uses to select those companies will most likely emphasize the same metrics this fund uses. In other words, there is still time to stake out a position in small cap stocks before the big money on Wall Street shows up and drives the share prices considerably higher. I don't know how soon that will happen, but once it's done, these stocks could move quickly given their size compared to the amount of money coming their way. And that's this week's PF video update, and I look forward to talking to you in another week. Thank you.